Hello. In this class we are going to discuss about our new chapter fund flow statement. We know that the balance sheet shows the financial position on a particular date. Similarly, the statement of profit and loss, that is income statement, shows the net result of the business operation, that is profit or loss during a particular period. Unfortunately, both these statements do not show the flows of funds during a particular period, or we can say that these statements, that is the financial statements, balance sheet and income statement, profit and loss account, do not show the flows of funds during a particular period. In these statements do not explain the changes in assets and liabilities from one period to another. So there is a need to prepare a separate statement that explains the changes in assets and liabilities between two periods. This statement is called a fund flow statement. We can see that it is a statement of flows of funds. The flows involves inflows and outflows of fund. It is a statement showing movement of fund between two dates, and it tells us from where the funds have come and where the funds have gone. According to Anthony, the fund flow statement describes the sources from which additional funds were derived and the uses to which these sources were put. The fund flow statement, we can say that it shows the statement of it is a statement of flow of fund. That is, here we can say that it is a statement of inflow and outflow of fund, or the sources of fund and from where the funds are gone. All these are shown in fund flow statement. There are preliminary techniques of fund flow statement. We can say that there are two preliminary techniques. The first one is classification of items into current and non-current items. We already learned about the current items and non-current items in the accounting statements. The first one is current items. It includes current liabilities and current assets. For the purpose of fund flow analysis, all items of balance sheet are classified into current items and non-current items. The current items include current assets and current liabilities. Similarly, the non-current items include non-current assets, that is fixed assets, and non-current liabilities, that is long-term or permanent liabilities. The list of current items are given below. It includes current liabilities, which includes sundry creditors, bills payable, bank overdraft, outstanding expenses, provision for doubtful debts, tax payable, dividend payable, etc. The current assets include stock in trade, short-term investments, bills receivable, sundry debtors, cash in hand at bank, prepaid expenses, accrued income, etc. And the second category is non-current items. It includes non-current or permanent liabilities and non-current or fixed assets. The permanent liabilities include, we know all these, that the equity share capital, preference share capital, general reserve, profit and loss account, capital reserve, capital redemption reserve, debentures, long-term loans, provision for depreciation. All these are included in permanent liabilities. And the fixed assets include goodwill, land and building, plant and machinery, furniture and fittings, vehicles, patents and trademarks, preliminary expenses, profit and loss account, the loss, and long-term investments. These are non-current items. The first, in the preliminary techniques in of fund flow statement, the first one, we have to classify the items of a balance sheet into current items and non-current items. Thank you.